John Burke, we keep hearing about a slowdown in China, but you're expecting a big upside surprise in China in 2013. Why is that?
We believe that much of what's going on in China is politicking. Every 10 years they name a new 9-member standing committee of the Politburo, and that's what's going on right now. Nobody's paying attention to the economy, and once that's done, and it will be done by the end of November, then China gets focused on their economy again.
You're also bullish on Brazil, so is it as China goes, so goes Brazil?
To some extent, yes, but we like Dilma Rousseff. One of the things she's doing right now, she's making inroads into reforming the corruption. She's also, Brazil has some of the highest electricity rates in the world, and she's making progress towards bringing down those electricity rates, which would be good for Brazilian industry.
And how do you invest in these emerging markets? Through ETFs, or do you buy individual companies?
We like individual companies. Brazil, for example, a name that we like there is CPFL Energy, which is it's the third largest utility in Brazil, but it's the largest non-state-owned utility in Brazil. So we like this to keep the government out of our business, and we get a 7% dividend on that stock.
Now, a lot of people are very bearish on Europe, considering all the turmoil that's going on over there. You just consider it dead money, kind of like Japan. Why is that?
Because the political situation in Europe is so conflicting. What France needs is completely different than what Spain needs and what Germany needs. So we think they're going to be bickering for a long time, and we just don't see any real progress being made.
And in the U.S., you're actually looking for some disappointment in 2013. So how do you invest with that in mind?
Well, we're afraid, the market in the U.S. has gone up 30% in the last 12 months. Meanwhile, the economy has slowed down. So we're afraid the markets will be disappointed by whatever they're expecting to come, the change that they're expecting because of the elections. So we're looking to invest in names, for example, Cliffs Natural Resources, which is a U.S. company, and they sell their iron ore throughout the Great Lakes region, basically to the U.S. steel business. So you might say, well, how do they benefit from, say, trends in China? Well, the iron ore prices these days are set by China because they're buying the bulk of the iron ore. And as China's economy starts to come back, then we expect iron ore prices are going to move up, and that's very good for Cliffs Natural Resources.